How to get a monthly repayment business loan up to 5 million, 1 million, 2 million, less than that, whatever number you are shooting for. Hi, my name is Michael with Viral Funding Solutions. I'm an expert business loan broker. Let me jump right into things. So in this market today, considering everything, it is much harder to get a lump sum in a monthly repayment. And what I mean by that is, let's say you were looking for 50,000 and you wanted it in a whole lump sum that has to be repaid back over 3 to 24 months, whatever that period is, non-SBA loan related. Okay, I'll get into that in a moment. But let's say you're looking for maybe even 100,000, and at 100K, you're thinking to yourself, can I be eligible to have a monthly repayment? The banks are different. Private lending is a whole different field. So whether you can get approved through a bank or not is one thing, and it works okay, but if they're directly impacting your cash flow because they're going through your account, then that's another thing to take a look at. So when you're in this private lending world right now, what's happening is, to get on a monthly repayment, we would have to be looking at superior details. And these are like business term loans that can be between 1 to 2, sometimes up to 36 months. Pushing past 2 years is hard unless the funds, the ROI is there. Your revenue is substantially large. We're not even talking just 100,000. We're talking like 300, 500,000 and above in a lot of cases. But once you hit those 6 figures, it looks a little bit better. But ideally, what you want to have, and this changes again in the market, and so there have been updates on this. I've spoken about this topic in the past, but to have that blend of a term loan / MCA, because that's what happens when you get a term loan product. You're thinking you're going to get a monthly repayment, but it's like an intermix between an MCA and a term loan. There's ones with APR, ones without APR. There's a little bit of a factor right here. It's a little bit of a difference over here. If it's even an online bank, it's a little bit different. But they're kind of intermixed, and there's not necessarily anything wrong with an MCA. It just depends on how you use that funding. But to get even looked at for a monthly repayment option, you want to have at least 3 years in business, not even the minimum of 2 years. And there's been an instance where I've made content on it where it was like 2 years, a 660 FICO. You want to have at least 25,000 being deposited, if not 300,000 in annual gross revenue, with no foreclosures, no bankruptcies, no liens, no late payments. Try not to have that. Minimal NSFs, negative days, non-sufficient funds, NSFs, that's what it's for, and a few other things. But times change, and certain lenders move their guidelines. And so even if a monthly option is available at that standard, what we want to ideally see in this industry, it's at least 3 years in business. Have a 750 and above FICO credit score. That's ideally what we're shooting for, not a minimum of a 660. So 660 is just the bare minimum. And at that degree, it may be more of a weekly repayment. We could probably do bi-weekly, but a lot of the times it can be weekly or even daily for those term loans. But if you have that profile at a 660 with 25,000 plus or 300,000 in annual gross revenue with 2+ years, no foreclosures, no bankruptcies, liens, and that open in the last 3 years or so, then we can look at an entrance point between a weekly, maybe daily, maybe not even monthly, until you get to that 750, 3 years plus time in business. Stronger the better. Clean business bank statements. You want to make sure those are looking good. You're not fluctuating much, and you're not taking too many dips. Something that we just saw is seasonal, and we're not just going to reward you because if it's a seasonal thing in a lot of cases, unless you show a repeating pattern and it's very consistent over months, not just once every year at a certain time. You want to have strong daily balances every single day. Sales, average daily bank balances. How much do you keep every day? How much do you have at the end of that month? And those also amount to clean deposits, which I'll get into in a moment. But for revenue, you want to have at least 50,000 plus per month in revenue. Not the bare minimum of 25,000, but we're looking at 50,000 in monthly revenue / sales to even be looking at you getting a monthly repayment. And even then, it's not a guarantee, because you may have something on your debt. You may have additional debt amounting to 150,000, $200,000, and we're going to give you a monthly repayment on top of that? No. If we looked at your P&L, we looked at your balance sheet, we looked at everything you have that you still have to pay, like a debt schedule, I can determine that. And if you have no debt, it's better. Your chances increase more for getting a monthly repayment of a lump sum. But it's not necessarily easy. And the majority of individuals who do go the private lending route end up getting a weekly, sometimes bi-weekly, but the majority of it is a weekly repayment, if not daily. And that's not necessarily bad. You have to think about how you use these funds. Does the benefit exceed the repayment? Are you taking these funds and using them to double, triple, quadruple your ROI? You're in a pinch. You have a couple of projects. Yeah, it would be nice maybe to have a monthly repayment, but it's another question. Is it low? Is it high? Can I substantially take on another monthly repayment? We don't want you taking on that on top of rent, on top of credit cards, on top of other businesses that you have debt under, equipment loans, and you're like, you can't even make the payment for us. So the lender's very understanding of all of that, and we won't give you something that's going to hurt your cash flow. You can't keep enough in the bank. We come up with this in our underwriting and everything. But the only other way that I'd see fit for getting a monthly repayment is to get a revolving line of credit, a business line of credit. You have business credit cards. So that would be the way to go. I'll come to the comments in just a moment. Welcome in, guys. And if you just joined me, I'm going in about how to get a monthly business loan repayment wise. And it's quite difficult too unless you have that $50,000 per month, 3+ years time in business, a credit profile that's 750 and above. And the credit still has to look, more so clean. I know it's not a credit-based program, but the credit, if you fluctuated from 700 to 750 next week, you're going to be back, or you're going to be going back and forth. There's no reason for that lender. And then you have something derogatory. There's some probably like criminal thing in the background that's too fresh, or something that they just don't like. The background doesn't check up clean. You've had something of a problem in the past. Maybe it's been resolved, but just to not take that kind of a chance, we have to start somewhere, and we have to start probably with a weekly, maybe even a daily. And so clean banks, strong daily balances, I said, average daily bank balances, revenue, again, like I said, 50,000 plus per month, and then 3 years. And that product can be a mix between an APR business term loan and a merchant cash advance. It could be a mix of the two. They kind of intertwine. And the only difference there is that we're not looking at those, credit card receipts in a sense. That's why it's based off all revenue, and that's why they kind of intertwine. That's where it goes as a business term loan product. Now, the only way, I said again, is a revolving line of credit where you can pull money out. There's a couple. Listen carefully. A revolving line of credit, and I'll go into these specifically. An equipment loan, traditionally, equipment leasing, leasing to own, financing, sales leaseback, whatever that situation is, EFA to lease, et cetera, And so that can happen between 1 to 5 years on monthly repayments. You have the business line of credit, as I just said. That can be a revolving line of credit. Those can be daily, weekly, or monthly. A majority of people end up getting monthly on those. If you're not over leveraged with other products and other debt, then we can probably get you a monthly repayment. And the third one would be an SBA loan. The SBA loan, the 7A, there's 504 loans, not the EIDL loan. We're not speaking about that. We're talking about an SBA 7A growth and expansion loan, or you can use this for consolidation or refinancing, and it doesn't have to be given with collateral. And so those are the options. There are a few other ones, like a personal/startup loan, and you could say a little bit more. Like I said in the beginning, that MCA is the same thing we were just speaking about, and mix of that with the business term loan. So keep that in the back of your mind as you're trying to get a business loan online, and you're like, why can't I get a monthly repayment? I said there are monthly repayments available. Yeah, but the standards are also changing. The guidelines are changing. The market is changing, and we're going to see this for a long time. And the majority of people end up getting a weekly repayment if you have strong details. If you're doing $25,000 and above with the 660 plus FICO, with 2+ years time in business, no foreclosures, bankruptcies, liens in the last 3 years or so, then your chances of getting a weekly repayment increase. Now we have to still look at what other existing debt do you have, when will that maturity date happen, have you completely paid it off, origination, the remaining balance of that, other unforeseen circumstances that we see in our underwriting. And so your other alternative, like I said, it's not always the one, but the revolving line of credit, which you don't always get approved for more than the lump sum. The lump sum you could probably get, like, let's say for example, you got $200,000. but a line of credit will only give you like 75 to 85,000 or 100,000. Is it enough? That's a question you got to ask yourself. And over time, maybe 6 to 12 months down the road, you can get an increase, perhaps. But do you have enough time to wait for that? No. So let's get what I can. If we can do the two, we can try to do a combination of them. And then you have the equipment financing situation, or all traditional equipment lending. And you can look at getting a monthly repayment. The SBA 7A loan up to $5 million, which I'll transition to in a moment. You have a personal loan you can use for business, a startup loan, and that could be used, of course, for business, the nature of that. But there are quite a few. And just know that if you're ever in that option where you're trying to get an advance or a term loan, there's different wordage to it. It comes back to that you have to meet those parameters. If you don't have that fundability, the time in business, the revenue, the depositing with that revenue, the annual gross revenue, the credit profile, like I said, of a 50,000 in depositing per month, 3+ years, clean and strong daily bank balances, average daily bank balances, then your chances of getting a monthly repayment, and even that is not even a barometer. That can even change a little bit per lender and per industry. That's another thing. Per industry is what we have to look at and say, hey, can we even get you approved because of that industry? It's one thing to say, hey, you're in the industry, but you already have more debt. You have too much debt. So it's not going to work. Regardless of that, you had lower credit, so we're going to probably end up giving you a weekly repayment to begin with. So those are some unforeseen circumstances that you may have not heard of, or you may have heard me say something in the past, but times change. And just to keep your expectations in a place where you're like, well, I thought I could get a monthly repayment and it's just not happening. And it's because of things like these. And when the market keeps changing, I'll let you know, but it'll be like this for some time. Now, what I'm doing here, I'm looking through one of my emails so I can give you a little more information on one part that I want to make sure I have it per detail. I could just give it to you because I know it up here, but I want to make sure I don't miss anything. Welcome in. I'm doing good. How are you guys doing? So let me come into my email where I send people my questionnaire form. I sent one recently. This one I want to make sure I take a deeper look at and go into the traditional merchant. In the meantime, feel free to ask any questions. Okay, so this is another situation where I have another lender. There's probably like 3 to 4 lenders, 2 to 3 lenders at most, who will even give you a monthly repayment, whether it's a merchant cash advance or it's a business term loan. And like I said, again, there's APR products, there's non-APR products. It's a little bit different how it's calculated. Well, you can say APR for everything. It's a bit different how it's amortized. And so the business term loan and then the MCA, they intermix. So we can have a product where it's based off of a factor rate. But not necessarily is it bad, and it can also help you save more over time, total cost of financing. So here I have another lender. So now let me see here. So with a lender like this, where we can probably get you a bi-weekly or even on a monthly repayment. One second. Let me move. Yeah, there it is. Wanted to make sure I had that. So to get a bi-weekly or a monthly repayment, I have another lender where the same applies. 50,000 plus per month in revenue / sales, those deposits. You want to have a business in this one, 12 months or longer, but this is more of a straight line merchant cash advance, not a mix within that and a term loan. And even at 12 months, those may have changed a little bit. And again, as the market changes, each lender is different, and for each industry. A 650 plus personal FICO credit score is what you want to see. Less than 6 non-sufficient funds, NSFs for short, in the last 30 days. And then less than 5 negative banking days in the last 30 days. But even at the minimum, it doesn't mean it's going to work for you. You still have to have stronger revenue. You want to have stronger personal credit, and the 650 is a minimum, because if you have so strong revenue and it's not fluctuating, strong average daily bank balances and average monthly balances, that can also help push that monthly. But Ideally, a 650 can be an entrance point. It's just you want to be 700, 750 and above on that side. And it's very minimal, low documentation. You can get in realistically with like 3 months of bank statements, a voided check, and a copy of your driver's license. And if you're looking to get 150,000 and above, usually you would have to supply more financials, like a year-to-date profit and loss, the most recent business tax return, and then just the rest of it of what I just mentioned. And it could be a little bit more like an AR/AP report. And just know that if you're looking for amounts that are above 150 or 150,000 and above, this is what happens. And it's common. You should be ready. And like I tell every business owner, before we ever even get into an application, even if we haven't talked before or if we have, it goes without being said too, I may say it, have all your documents together. Put them in a drive, put them somewhere where you can easily access them. Because I have those business owners who just take forever to send me it, and I can't send it over to the lender. The lender's then asking me questions, and this is going to go through or not. Why are you wasting your time? I mean, I'm not. I didn't know it would take them that long to gather the documents and then send them over. They gave me some indication, but their projection didn't line up with their words. Their actions didn't show for that. So make sure you have your documents, have your 3 years of personal and business tax returns, your last year's profit and loss, at least 2 years ago, your current year-to-date profit and loss through the quarters that we're looking at right now, quarter 1 to quarter 3, the majority of it. And make sure you have balance sheets, AR/AP report. If it's an SBA loan, a personal financial statement, this balance sheet that we need. An in-house application would be in your best interest. This is what's happening a lot. It would really help you. But make sure you have everything. Don't just put it and just forget about it. Store it. Like I have a business owner right now. Like that. Got in. And because he had sent me all his documents, he had it already organized. And so I was able to submit that over to the lender and my team. And I go, okay, next step, move like this. But if you're taking a little bit longer, it's not necessarily wrong. It's just understand what your expectations are. If you're not meeting them, there's a reason behind it. Because whether it's your documentation, it's you who's getting in the way. Maybe it's your ego, your frustration, your stubbornness, if you have any of that. Leave that behind. If you do have that, just leave that at the door. Don't bring it over here. And so that's kind of the gist of this video. That's all I wanted to go into. I'm going to go into the comments here in a moment. But just know, just to recap on all of that I just mentioned. Again, how to get a business loan with a monthly repayment, even if it's a personal loan for business. A startup loan, you have the revolving line of credit, business lines of credit, the credit lines through business credit cards perhaps. That's another route. You can do an equipment loan. You can do an SBA loan. There's probably a little bit more. But with the merchant cash advance blended with the business term loan, the expectations of 3 years, a 750 plus FICO credit score, clean business bank statements, strong daily balances, fluctuation has to not be really there, consistently growing, and you're projecting upwards. Strong need for funds that would require you to take on a monthly repayment or a bi-weekly repayment, 50,000 plus per month in average or deposits, revenue / sales. And so if you can't even get it there, you have the revolving lines of credit that potentially can work, or you can add the two together. And another piece of this component is, like I said, there could be a minimum of 650, but even that, it's hard because you have to have way stronger revenue, way stronger time in business. The non-sufficient funds and negative days, make sure you keep those low. And don't project for that to be the case. Even if it's just weekly, it's fine. It could be bi-weekly perhaps. It's okay. Nothing wrong with that. It's helping you manage your payments on time, so it decreases the chances of you going into a default, especially if you're taking on a lot of debt or you're taking on a lot of credit, personal credit, and there's some history there that shows us that you haven't been able to make your payments on time, or it's just you just take on too much. We can't take a risk on you not doing that again. It might happen, so be very careful of that. So the SBA 7A loan, we can also do what's called a Hybridge SBA. We can combine there's 3 things we can combine in bridge funding. We can combine an unsecured term loan, which is the 1 to 2 year frame, sometimes up to 36 months, and that can intertwine with an MCA. We can combine that with a line of credit, or we can do the unsecured term loan, line of credit, or the cash advance. Cash advance with the line of credit, perhaps. And in the meantime, while we're approving you for the SBA or looking to get you approved for because it's going through underwriting, then you can take financing, bridge funding to use in the meantime that you feel is worth it for you. And then if you get approved for the SBA loan, what you get approved for, then you can look at trying to consolidate your other loan or your loans over here up to 2, up to even more of that, depending on the balances that are left remaining on it. And so that's a huge advantage, because let's say, for example, you have an unsecured term loan of 12% interest, or you were given a factor rate of a 1.12 or of a 1 that's fairly low actually. That's probably not going to exist. So about a 1.25. And we all looked at your overall interest and how it's amortized. It's a bit different. So that's why we call it factor rates. But you could realistically say it's 25% interest if you wanted to, but it's calculated differently. And so you only have 12 months, but you got approved for the SBA loan. What you then do is, hey, I only paid about 3% or 4% or 5% of this. How about I look at consolidating that underneath my SBA loan? Okay, we can try to do that. You have an extended term up to 10 years, maybe up to 25 years with real estate, up to 10 years with working capital related. So just keep that in the back of your mind, that it's not a bad thing to have that. And what you want to be prepared with is having a business line of credit, whether it's a monthly, weekly, or a daily repayment, whether you get an unsecured term loan that is monthly, bi-weekly, weekly, or daily. Like I said again, the majority of individuals end up starting with either a daily or a weekly. And if you have stronger revenue, stronger time in business, stronger personal credit, looks good, looks clean, then we can provide you with that weekly to start with. We can provide you either with that, maybe a bi-weekly, or move into a monthly. But you have to start somewhere. You have to say, hey, even if I started weekly, now I got to move into maybe bi-weekly, or I go from weekly to monthly. And my next time I come back to get funding, the next time around, or maybe 2-3 times later down the road, that's a possibility. After you refinance with your existing loans, after you clear that up, then maybe down the road we can move you into that monthly. And then we have another product we're evaluating you for. Okay? So that's what I want to make mention of. Now let me come over here to the comments. Welcome in. Hey, welcome in. Were you just exploring TikTok live and then I showed up? And I appreciate you. Thank you. And everybody else who has been following me. And whether you are a subscriber or not, this is one of the fastest growing channels on business financing. I'm an expert at what I do. I'm not a talking head like you see those people for a company. I'm a one-man show right now and I have to do everything. Just imagine that person who's done the marketing, the advertising, who runs the free or paid traffic and does the evaluating, the analyzation of people's funding details, dealing with the lender underwriters. In time, I'll have some VAs, but for now, I like the way that things are done. And I've been doing this for a long time, so I have a very good punctual and structural way of doing things. I'm disciplined. And so I set a time to say, for this hour is this, for this next hour, I take about a 5 to 10 minute break, then I'm going to do this for the next hour. Then when that's done, I'll transition here. This video was just not supposed to come up right now. I was supposed to do this at about 2. I was projecting 2 because I'm taking away from my LinkedIn right now. And I'm taking away from 1 or 2 clients to do this. But I appreciate you guys' time. If you guys haven't subscribed to, if you would like to, please do so. Like I said, if it's of value to you, I'm not forcing, I'm not pressuring you. I'm not telling you to go share the room. Like, people get into a talking point. Hey, go share this room. And I'm not going to be funky like it. I'm not going to be obtruse with it. I'm going to be real with you. I'm an old soul at heart who's very cerebral and introverted. And that's what you want from an expert. You don't want to deal with somebody who's going to do this to your ears, who at the end of the day, when you have to go to your family, all you can think about was that person that was chirping in your ear, giving you crap and over-promising and under-delivering. Right now, we're in the process of viewing certain people's applications with perhaps bait and switches. And that's not from us. That's from somebody else that they either applied to or they were getting in contact with them because they want to steal deals. And either they want to steal deals or they're not wanting to, but they're unethically doing things. And we have to investigate things a little bit deeper and have proof of it. Because you may fall in a situation where you didn't get the right lender. You didn't get the right maximum amount. Every lender is created differently. You shouldn't just be applying to every online marketplace or even just a direct lender. A direct lender in this industry is not or in this market, is not the thing to do. You're going to get a lot of the time declined. You won't get what you want. Higher interest rates and lower terms. The prepayment probably won't be there. It won't be enough for it. And the early payment discounts. There's a lot more that goes into this. And so I have my direct lenders. I have my indirect lenders through a brokerage where we do it in-house. That's what I would like to do. That's what I prefer because you get more flexibility. And again, like I said, I already have those partnerships and I hear back from the underwriting, I hear back from the lender, and I have my team with me who can help along in that process. So let me come over here to the comments. Appreciate you too. Thank you. I will leave it open now for about another couple of minutes. I do want to get done with my LinkedIn before 1:30. I have to go and connect with a few people who are interested, people who are not tire kickers, actual people who find energy and time worth and look at things from my point of view as I will look at their point of view. So don't ever bring that to the table, please. Don't be an egotistical, frustrated person who has their stubbornness get in the way. Be patient, relax, go read a book. You know, Secrets of the Millionaire Mind, Renegade Millionaire, The Tao of Charlie Munger, The Power of Awareness, Atomic Habits. Another book that I recommend for business owners, it's called Profit First. It's not in front of me right now, but I have another one here called 100 Million Offers by Alex Hormozy. And these are just some of the many books. There's more of them down here, and there's a lot more of them in my room. So that's just one way of like calming your mind down, but also meditating. Go exercise. Go work on personally developing yourself as a true business owner, just / entrepreneur, because as an entrepreneur, that's what we do. We innovate. We make more of what is already existing. We just find ways to make it better, enhance it, and for our people. And I'm always working on myself. Every day, I read books before I even get started with my work. I meditate before I even do any of that. I exercise before I do any of that. I'll do some yoga. Then I'll go, like today, I got weights. I'm going to do my lower body, get into the hot tub for a little bit, or get into the shower tub, relax my body, relax my mind after this long day. You have to find ways of alleviating your stress. And if you're taking that stress out because you couldn't get a loan, you got declined, this isn't working for me, I don't want that to happen, and No, stop. You leave that at the door and you come in with the right mindset. With me, you're working with somebody who's kind. Don't mistake my kindness for weakness. You do that, there's a form of betrayal, guess what will happen back? You try to get in contact with me, it's not like I necessarily will ignore you, but I won't put you first. Who knows if I'll come back to you? I've told you something time and time again. You try to do the way you want to do it. Do it. See what works. I have people who ask me, hey, can we get a business loan, but let's not run my credit, or let's not look at my personal credit. After all we've talked about, and you know how this works, you're then coming back to me with that answer. All right, Mr. or Mrs., do you have any assets? Do you have any collateral to offer up? Liquidity? Do you have any kind of invested equity? In properties, in property? Are you going to put your home on the line? Do you have accounts receivables, unpaid invoices, equipment, heavy equipment, stocks and bonds, mutual funds? Oh, well, no, I don't, Mr. Michael. Okay. What do you think we look at your personal credit? Over here we wouldn't, because it's asset-based. We don't have to look at your personal credit the majority of the time. Accounts receivables, we're looking at your customer who's paying you on invoices. The factoring company is looking at them, the majority of it. Well, you don't want to get your personal credit ran, even if it's a soft pull. If it were a hard pull, we would communicate it with you so we can get your consent, get your portion of it, if any, if we have to look deeper. What do you mean we can't look at your personal credit? What do you have to hide is my question. What do you mean not run your credit? What do you mean not check your credit? How can we not check your credit and give you money? How does that work? You do know that we're not even getting into business credit now, but your personal credit is an indicator of your character. It's an indicator of how you make your payments, your morality. Will you be able to pay back the lender? What did you just take on in your personal credit? How much debt do you have? Oh, well, we can't afford to give you this because we just saw all of this. Your history, your current payments, your debt obligations, your DTI is probably way too high that we also saw. It's not a huge credit program, but it's more on revenue. But still, we'll look at your personal credit, soft pull for the majority, and then say, hey, if there is a hard pull later down the road, then we'll have your consent. We'll ask it from you. But don't come into this thinking we're not going to look at your credit. Don't make my life hard. Like, in what world do you live in where we're not going to look at your personal credit? Honestly, be real with me right now. You know, you reframe that question and ask, is there a way where we can avoid checking personal credit? Because if then, Can we not do this? Can we not? That's a closed mind. That's a person who goes into this trying to hide something or saying, hey, I just have a big hit right now. I don't know if I, without checking my credit, it'll be better. But no, it doesn't work that way. For anything you get approved for business credit cards, you got to leverage your personal credit. Even some form of a business credit, wherever you are starting. But that's a bit different because you can, apply with your EIN, and it's more underneath your business as opposed to your personal side. So now let me come to the comments. Anybody have any questions? Need any kind of help? I'm getting back to questionnaires. But be real. I'm gonna put on my form, like, nobody fill this form out unless you're serious. Because I don't want tire kickers. I don't want people who get a phone call at some point that I don't even want to have to give a phone call, but they put me in that position too because they've been unresponsive and they took time to fill out a questionnaire form. You put me in that position I didn't want to be in as an introvert too. So shame on you. And it's like, well, why'd you take the time to fill this out? Well, I just wanted to explore options and I wanted to see what was out there, but I'm just kind of shopping around. And so when most people talk to me like this, it's, hey, I'm not going to interrupt you. I'm going to let you finish because I'm a listener. But oh boy, you're going to get a handful. Be ready. Because shopping around does you more harm than good. You're going to get your credit shopped around. You're going to try to find something for the lowest price. Maybe somebody will bait and switch you. They'll look at another offer and say, damn, there's another person who's trying to get their business. And they'll see that and go, hey, we're going to lower the amount. We can offer you less. But it's not achievable. It's not real. Or even if it is, it's like you didn't go to the best lender. This lender over here was going to give you $100,000, but this one was only going to give you $50,000. Over here, you got 7-month terms. Over here, we were able to get you 9-month terms. Even if you didn't even need the 9 months. Maybe there's a prepay. Maybe there's something else. There's contingencies. So you got to understand all of this. And if you don't, not every lender is created equally, and you're just going to fall for just applying to those places you found online, and you said, I'm just going to put in an application. And now they're calling you from everywhere. Now they're just texting you. They're probably on your social media. They show up with me. I've been there. I've been in your position. I know what it feels like. Yes, I do. Startup business funding. And actually, I made a video today. Not today. I uploaded it today to the YouTube channel. So if you go to my bio, click the link. Actually, a faster way to do this, because I took certain videos away. But if you type in my name, Michael, and then my last name, which is Granados, Granados, you should find my profile. But here, I'm on my YouTube channel now, and there's my username there. I have to change, by the way, which isn't the one I wanted, but it's my first and last name at Michael Granados 7909, and you should be able to find it. But it is my recent video. So if I go to my channel here, and I see my recent video, it says here, how to get a personal loan for a business up to $500,000 without time in business, low interest rates as well. And here, this also speaks to a startup loan. So personal/startup loan is the one to look at. Yes, Yuli says, I have gotten your email. Like I said, again, I haven't been able to respond to yourself, as well as a few other people. Friday, Saturdays are catch-up days, so I'll try to get around it tomorrow, if not Saturday, hopefully. And after this is done, I do have a few emails to respond back to. Yeah, I got you. Don't worry. I'm not avoiding anybody. Like I said, again, I put it in the email broadcast today. I'm so flooded, guys. But this is what you want. I don't want to reiterate myself. But if you want the best, you'll get the best, period. Bar none. Myself with my team, who I associate with, period. So you don't have to go continuously apply to other spots. If it's an in-house look, we're going to do that. And we're going to probably pull away from 1 or 2, 3 lenders. And we're not going to hurt your credit. But it's better to do it this way because I know of 2 to 3 lenders. We already have those direct lender partnerships, but it's better to do it in an in-house look like this because of more flexibility in who we know. And so here we go. Okay, for a home builder, we had 2, but this one worked better, and we did no harm. We said, okay, this is the most legit, the best, the 2 best, head-to-head, competing for you, and we're saying, okay, this one is better. And so I'm having that communication with them, the underwriter, and everything, and so it's okay. It's going to work. But when you're there doing this and you're over here now applying to this and then to this, or you applied to it before, you're like hearing it from everywhere. And you're just thinking, man, now I got to find something to get approved for. And you know what the major differentiation is? You're working with somebody like myself. If you know my story, you know it, and I won't go into it right now. But if you go to the bio, it should be the 3rd bio, and I believe you can learn more about me. And if that sits with you, great. If it doesn't, it's not for everybody. But for those of you who do, you'll find a lot of great information in that one. So yeah, I made a video on my channel and I uploaded it today for about 24 minutes and 34 seconds. Watch it thoroughly. I had a person today just comment, I wish you could show us what the credit score level to this program. Well, I did. He just didn't watch the video, and they responded back like, yeah, they're bad. They should have watched the whole thing. And that's a problem. Like, I could understand that. I'm sympathetic, empathetic, but hey, that has no place. That merit, like, take the time. If you would have just watched for like 2 to 3 minutes, you would have seen it on the screen, the credit score, without me telling you. So the fact that I have to go back in there and respond back to something like that, that's energy. For somebody who did not even take a little bit of a time, that shows me that person won't even read something when I send it to them. That shows me that that person won't even like consider an email response back when they see their best funding option and options, because they're just going to continue to want to get on a phone call, continue to want to just send me text messages without doing anything. And I have people literally who start applications without a phone call. It's not always necessary. There are points to it that are, even if you're getting 100 to 200, a million. I've had people who go with 2 million a month, 3 million a month, who don't even get on a phone call with me, but they trust me. They know me. They're not struggling with that. They're like, okay, Michael, show me what you got. I got you. Let me go to work. I'm going to go talk to my lender. I'm going to go talk to my underwriter. Let me speak to my team. Period. What's the market like today? Like I showed you. For a business term loan of 1 to 2 years, sometimes 1 to 5, but in this market, 1 to 2, sometimes pushing past to 36 months because the banks aren't lending as much as they used to on that front, and the amount you can get. But it's harder to get approved for that. You have to have stronger credit, personal credit, 750 and above, 3 years, 50,000 per month in deposits and sales, revenue, strong daily balances, non-sufficient funds, less than a certain amount. Even at a 650 point, that's not a good enough amount. 2+ years is really not enough. And it's also industry specific, if it makes sense. But the majority of people end up getting a weekly repayment, maybe a daily to start with. Daily, then you move into a weekly. Or weekly, then you can move into a monthly. Weekly, then you move into a bi-weekly. And then from there, you can move into a monthly. Or how about you get a weekly lump sum, and then we can get you a monthly repayment on a line of credit, or it's both weekly. Or but in that meantime, we're getting you a monthly SBA loan. Okay, now you got your monthly payment. We can look at consolidating that. Boom, monthly option. Now you have also business credit cards, and you're differentiating your business with your personal, and you have a credit line you can liquidate for cash and then use that for several investments. That's how you do this. But it's harder to say. It's easier to say it, and it's not harder to do. It's just because you have a lot of friction. Your friction is, I'm going to try to do what's the least amount of effort, least amount of documentation, and I should expect the highest amount of result. That's not how this works, unless you already know. Yes. We do 2 things. We look at, even if you're a sole proprietor, 1099, whatever that is, LLC, S Corp, C Corp. I'm doing a lot of this stuff actually with my accountants on my team, helping out other business owners. Like, you guys wouldn't even imagine the stuff that comes up. But yeah, personal, are you using a personal account for business? I mean, you want to be using normally a business account because that's what lenders want. If you're using a personal checking account for business, your approval odds become about 20 to 25% of your lowest monthly revenue in the last 3 months, the majority of the time. And you should be doing at least $3,000 a month. Have at least 3+ months time in business. No credit requirement usually at that point, at that lender. But for all the other ones, you want to be generating more, like $5,000 a month, $15,000, $25,000, $20,000, $30,000. And then when we get into those higher tiers, just think about it. I wanted a monthly repayment. Well, no, let's try to look for a line of credit then. Well, I wasn't going to get enough for a line of credit, but everybody should have a line of credit. Even if you're not going to withdraw from, you're not going to have to pay interest on it as long as you don't take anything out. Well, okay. Well, with a lump sum, you're only given 9 months for $100,000. You got to pay that back in those 9 months regardless. Pay it off early, good. Early payment discounts, 20%, 30%, whatever we're looking at getting you. Done. Simple. But this expectation at the beginning, if you're just joining me, I spoke about having to get a business loan with a monthly repayment. So, appreciate you. Yeah, and I haven't responded back. Please feel free to jump in my DM again. I know you've been looking for help too. And I've been busy, like Uli says right now. I've had Thomas. I've had quite a few people who I'm so fortunate to have. And I say it's in my life, like literally, you guys maybe are from a different part of the world. Maybe you're in a different state. Maybe we're in the same state. I have a guy up north right now looking to get about $2.6 million for his trucking business up north Washington. and I communicate with him all the time. Great human being, great person, great communicator of his business, knows how to get done. He says it how it is. He's not going to be fluff. Very respectful, doesn't cuss, and he just knows himself as a business owner, as a CEO who I speak to. And I speak to you guys all the time. Have your documents in line, have your story in line, have your business plan. The expectation of getting a monthly repayment, leave that out the door and focus on how can I get to a monthly repayment? How can I even get a weekly repayment? Because the majority of people do. Daily, yeah, if you have like less than 600 in credit, even a 600 credit score can still determine that you have a daily repayment. How do you get away from that? Well, clean up your credit first and foremost. Even trucking, it's hard to get a weekly repayment unless you have 50,000 plus per month. You have 5, and the requirements there have become even harder. You have to have 5 plus trucks, have them operational, because we do check those things too. They're not being operated. Okay, well, what is the reason why they're not operated? I needed to fulfill on 1 or 2 employees on my payroll. I took a hit and I'm looking to recover, and I have 1 or 2 people already lined up for the position. Not I'm looking for somebody for the position. I have already 1 or 2 people looked at that can come in, and they're going to take these routes. With those routes, this is the amount of money that I'll be generating. Isn't that better than saying, I just need 50,000 for payroll? I just need it. No, it's not enough. So 5 plus trucks for trucking, 5 plus years is better. You want to have 50,000 plus per month. You want to have even stronger credit. 660 is really like an entrance point, but you want to be like 700 and above. And that's just to consider you for like a weekly repayment, not even a monthly yet. And stronger credit is definitely going to help. Stronger revenue will definitely help. And there's quite a bit more. I made a section on that already on the channel. And it's also a part of my Business Funding Mastery Academy course. This will be going in there, I believe, as well, or a written form of it underneath the unsecured term loan option. So if you're watching that later, great. Probably on YouTube as well. Let me get the light on. Does anybody have any questions? Before 1:30 or 1:30, I gotta go so I can continue my LinkedIn stuff, and I gotta go reply back to people's comments. Another thing too, I know we're fixated on, like, we think about it and you go, we get 20,000, we're paying back 27,000, okay? All right, I see a $7,000 difference. Another one's like, okay, I'm going to be getting a $15,000 difference. Another person probably gets like $28,000 difference because of their industry. Higher rates, lower terms can do that to you. So we look at the industry and we go, well, why is this person paying $15,500 back while this person over here is paying $25,500? Well, the qualifications, the rate being less, the terms being better. That's obviously what it is. It's the term above all that's better. So somebody who gets 9 months paying back $25,500 as opposed to somebody who was given 12 months, 15 months, was only paying $15,500 to $12,500, perhaps. So you got to look at those two things. But interest rates, factor rates, they change. Like right now, trucking, if we're looking at the factor rates and interest rates, we can say that it's 1% to 3% per month. But factor rate related, it's about 1.5, 1.55, 1.56. The industry's just gone hard. You just have to have stronger credit that can lessen that and probably get you into the 1.4, 1.38 is harder to achieve for a trucking business owner unless you have a substantial credit like 750 and above, honestly. That can lessen that from a 1.5 factor rate. So you have to understand that the industry is really hard to get approved for in that case for like a 1.19 to 1.3 factor rates. It's just harder. It's not doable. It's harder. Just understand that. 2 more minutes. I'm over here just writing a few things on my notes. For being respectful. One thing that I did forget to do this morning that I should have already done, I usually do it before I do any work, is I write 3 things that I'm grateful for and thankful for. I do also say it in the morning up here, but there are 3 things that I'm grateful for, and I usually write them down here on my notepad before I get any work done. All right, everybody. I'm going to cut it before the 1:30 mark, at least on what I have here and there. Appreciate you guys for tuning in. Keep looking out for my content. Join that Business Funding Mastery Academy course for free if you haven't yet. And if it isn't for free, then it's okay. There might be some help for that. Or it's always worth it, no matter what, a lot of the times, because you would value it even more. And for the business questionnaire form in the bio, real estate forms, all other material you'll find in there. Go to the site if you'd like, viralfundingsolutions.com. Email Michael, Michael, at viralfundingsolutions.com. Find out more. But fill out that questionnaire. That's the best way to do it. It might be underneath here if you're watching it on YouTube in the course, or if you're on TikTok or another streaming channel. Go to the bio, check it out, and stay up to date with what's happening in the market, because I will always keep you up to date. There's a lot going on right now, and that will conclude everything. Appreciate you guys. Thank you for the shares too, if I didn't say so. The likes, the comments, for showing up, even if you didn't comment and just watched for the first time, or you've been here for some time. All right. That's everything for now. Appreciate you guys. Take care.